Stocks on Wall Street rose to new highs today, adding to the record gains seen yesterday. And it comes as investors express optimism that a resolution to the war in Iran can be reached quickly. The Dow Jones closed the day up 115 points, the Nasdaq up 86 points, S&P 500 up 18 points. CBS News' Kelly O'Grady joins us now with more. So I watched your social video. You broke it down with Biggie.
Yes, you're there. Very important economic analysis.
You bored him, but not me. But how do you describe this rally?
So, look, I think it's a little bit of vibes, if I'm being perfectly honest. And I want to take us back a year to when all of the chaos with tariffs were happening and we saw huge swings in the market. And then things calmed down because investors saw through that uncertainty. They saw through the chaos. And something very similar is happening right now. You see that oil prices have gone down. U.S. crude prices are well below $100, still above 90. OK, it's not like we're anywhere close to where we were before the war. But investors are seeing through this and they're saying, OK, we hope that these round two of negotiations are going to happen. We hope that there is a deal. That could certainly change. But that's really what's driving this. And so that's why I say it's vibes, because it's really more optimism than anything. The other thing, by the way, totally unrelated, earnings season just started. And the big banks reported very strong results. And that is an early indication we could see other companies report the same.
So can we expect more fluctuations?
Absolutely, because the second that an energy infrastructure gets bombed or the ceasefire is off or whatever it might be, you see oil prices rise. Remember, there was one day where it rose close to 15% in one day, U.S. crude, and you saw the market react, in response to that. And so I think you're going to see a lot of this. Don't check your 401k for a bit. Same advice I gave everyone with tariffs. But remember, we saw all that volatility with tariffs, and then we hit record highs. And we're kind of there again, where investors are just saying, OK, we've been here before. We've seen it up and down. And we want to capitalize on some of these companies that were undersold or they're oversold, and they were able to get back into a good price.
We touched on some of this with Joe, but can you explain, why does one 21-mile-long passageway in the Middle East affect almost everything of what we pay?
Close to 20% of the world's oil and gas goes through that. And so, yeah, we might not get our oil from there, but other people do. And when they can't, when China, when other countries can't get the oil that they normally buy from there, well, they still demand the same amount. So it's simple economics. When that demand is there, but the supply globally shrinks, prices for everything goes up. And just when it comes to oil, that goes into everything. Diesel, what it costs to transport your Amazon packages, what it costs to plant, the food that we're going to see ultimately in a couple of months when we go to the grocery stores. It just trickles into everything. But yeah, it's kind of crazy, right? Something in the Middle East and we're so far away, it really does impact it because oil is a global commodity.
Kelly O'Grady, thank you.